FedEx topped Wall Street profit estimates, but warned that its 2020 results will be hurt by the trade war. The company cites a weakness in global trade and industrial production. FedEx gets about a third of its revenue from outside the United States. It's often viewed as a barometer for global economic health. Shares were volatile in the extended trading session. Frank Holland has more on FedEx's results.
Well, FedEx has had a string of negative headlines recently, but still managed to post a beat on profits and revenues that were in line with estimates. The company says it expects profits to decline next year, however, due to trade uncertainty, global weakness, and also the decision not to renew a customer. They didn't name that customer, but it appears to be Amazon. The key takeaway is that FedEx is pivoting to focus more on its ground service, where it says it expects margins to increase. It also expects freight margins to increase. China, where it gets about 2% of revenues and has a major hub in Asia, that remains a question mark after it filed a suit against the Commerce Department, saying the restrictions placed on the shipper as part of the U.S. blacklist on some Chinese companies are unconstitutional. For Nightly Business Report, I'm Frank Holland.
And late last night, FedEx sued the Department of Commerce, saying that it should not be required to enforce federal export bans like the one targeting China's Huawei, and that policing the contents of millions of packages is virtually impossible. You might recall FedEx recently mishandled 2 deliveries for Huawei, which then prompted Beijing to launch an investigation into FedEx.